Investing. All the markets are going crazy right now, and I just wanted to hop on and make a quick little video. I just got back from my walk in my garage. I'm a little sweaty, but so I want to talk about the theory behind investing, and I think that a lot of this can be really familiar. Let's talk for a moment about just your general 401k retirement savings, right? So chances are you've heard people talk about the idea of just start, right? Compounding interest over time. Time is your best friend with investing in terms of your retirement. Like, it's amazing. Start putting $100 a month, whatever you can do at a young age, and you'll be so thankful later that you did, right? And a lot of people take that advice. My wife did that when she was working. Someone came to her work. She was a teacher, and they gave a little presentation, and it's like, hey, if you take this money out before taxes, then your after-tax change really isn't that much, and look what it will do over time. And she was like, cool, that sounds great. I'll do that, right? So a lot of people have things like that at their work, and they do that. What she didn't do, and what most of you probably don't do, is say, okay, I think that sounds like a good idea. Let me study the stock market. What mutual funds is this 401k going to be in? Where are they at right now? Is it a bull market? Is it a bear market? Are things high? Are they low? Let me time the perfect time to put my money in. You don't do that. And the reason you don't do that is because we know time is our best friend. So regardless of where you got in that little moment in time, if you are, let's just say 30 and you're planning on retiring at 65, you know you have time. You know that the odds of it not being a good thing and you not being in a better position in 35 years because you started putting money in today, it's incredibly slim that those odds are very slim that it's not going to be better, right? It's not going to be good. So you don't really worry about the minutia of would yesterday have been better than today or tomorrow better than today. Let me just start somewhere. I would challenge you to view real estate the same way. Now, I'm talking about your primary residence, okay? Real estate is followed by most people a lot more closely than the stock market, certainly more than mutual funds, because honestly, it's easier to understand. Mutual funds have a whole bunch of different things in them. So the whole point is that it is a bunch of different stocks all put together into this mutual fund. Most of us don't even know what the makeup of our mutual funds are if we have them. Real estate, we understand. It's a house. It's where we live. The value of it is much more logical. People need to live somewhere, so they're not standing in the rain. Therefore, homes have value, right? It's much easier to grasp in most cases than what causes stock values to go up and down. So I think it's followed a lot more closely, and therefore people kind of get hung up on this idea of like, oh, I got to time this just right. Well, I want to challenge you to look more big picture and long term. Right now, interest rates suck. Prices are a bit high. Prices may or may not come down. Interest rates may come down. They may go up, right? Who knows what exactly is going to happen? I would challenge you to look at your situation, just like you would with your investments, where you say, could I afford to take $100 a month and start putting it in my 401k? I don't know if today is the best time, the worst time in recent history to start doing that, but I know I can afford to, and I know that 30 years from now, I'll be glad I did. That is real estate. Now, if you're talking about getting something to fix and flip, if you're talking about investments in real estate, different conversation depending on your goals, and I'd love to have that conversation with you. But if we're talking about throwing money away on rent versus buying, I would challenge you to say, can I afford this? Is there a home I can afford today that I can feel better about being invested in something rather than throwing my money away to rent? Maybe it's not the home I would have loved. It's not the home I could have gotten even 4 months ago based on rates and everything else, but it is a home to get my foot in the door and start so that 5 years from now, 10 years from now, 15 years from now, you have leverage because you started. And so you have an investment that's been growing that you can use to further your goals. I would also challenge those of you that are in your first home maybe or your second home and you were thinking about moving up and now you're not sure what to do. You've got that 2.5% interest rate. That's killer. That is awesome. That is like historically crazy. Think about this. Someone loaned you hundreds of thousands of dollars for 2.5% interest. Good luck getting someone to do that again. It could happen again. I don't have a crystal ball. I'll be shocked if it does. But I was shocked the first time. So anything could happen, right? But I would ask you, what are your goals for you or for your family? Where do you want to live? What do you want your lifestyle to be like? And if you can afford a higher interest rate, you can afford that payment. It may be a stretch, but you can afford it. The challenge would be, do you want a lifestyle that's not what you want because it's cheaper? Or do you want to pay more for a lifestyle you want? Maybe a fun analogy of this would be cars. I bet that old beater that you had in high school could still be on the road today if you really wanted it to be, right? But at some point you wanted something more comfortable, you wanted something more reliable. And so you paid more money to do that. You probably took out a car payment that was higher, right? But you could afford it and it was worth it to you. So that's really what you need to consider is often once we've got that first house, we're not renting anymore, we have stability, we don't have to worry about getting evicted, right? That's huge. When it comes time to subsequent homes after that, I'm sitting in my third home right now, we've moved up into, it becomes about things like location, comfort, safety, security, space for a growing family, right? So you just have to decide what that is worth to you and not get hung up on, well, crap, if I had done this a year ago, I'd be better off. Or maybe if I wait, I'll be better off. No one has a crystal ball, guys. When I bought my first house for $215,000 in like 2013, I think it was, I thought I missed it. My sister had bought her first house a few years before. She's 3.5 years older than me, and they got all those awesome grant programs from the state of California, I think it was. Maybe it was a federal program, but they like gave you free money. You got like a tax credit and everything because they were really trying to spur the housing market back after the crash. And I was like, man, I missed all that free money. I got screwed, right? Well, geez, that house today, is probably $450,000. So it was not such a bad time. So you just never know what you're really dealing with. And so what you can know is, what are my goals today? What will get me there? And what can I afford? If you can afford it, honestly, do it. We spend more time in our homes than like anywhere else other than maybe your job. And that's a whole nother video we should talk about. If you don't like your job, maybe you should do something about that too, right? So that's my thoughts on investing. For some reason with houses, we're so caught up in trends and wanting to time things perfectly when we don't do that in other areas of life. The reality is, if you're 30 years old, I'm not a licensed investment dude, but I'll tell you this. I think you should probably set something away in a retirement account and be glad you did later, and I think you need to buy a house. Got questions about your specific situation? Love to talk to you. Got questions about what I did, what decisions I've made, what wins I've had, what losses I've had related to it? Happy to share all of it. Open book. Hope you guys have an epic day.